All right, guys, welcome to another show in Credit Able Cash. I am your host, Cash. Hopefully, everybody is having a great week or a start to a great week. We're going back to our financial talks today, and the topic for today is it's five common financial mistakes most people make, but there are a lot more than five that a lot of people end up making mistakes on. So, we'll talk about the five and we'll talk about some other stuff. If you have anything that you want to talk about, you are always welcome to chat uh, and we can discuss it. So, welcome everybody. Hopefully, we all can get better financially after the show, maybe learn something. If you guys got anything to contribute, please do. What's going on, Michael Lawrence? How you doing today, bro? Welcome to the show. All right, so try to kick off. I am also gonna mention that the WFR reunion is a week away. If you are a tenter or in the window film industry, definitely recommend checking that out if you are not attending already. If you are, I will see you there next week. I am so freaking excited for this one. That is going to be the first financial advice I'm going to tell everybody is don't lend out money unless you got a lot of extra money. This is how you ruin friendships, okay? And financially screw yourself. Don't lend out money. That's what the banks are for. All right, guys. Facebook user, don't know who that is. Let me jump on the other screen so that way I can have a dual screen and find out who is chatting. Oh, that is Rick Tallman. What's up, Rick? Pretty Rick in the house. So Rick's got some crazy ass trophies ready for next week's event. Again, cannot wait for that. But today, financial mistakes. Michael put one up there, real easy for everybody, is that borrowing or lending money. Whether you're borrowing the money or whether you're lending the money, you are putting yourself at a financial distress, risk, and probably hardship because whether you're borrowing or whether you're lending, if you're lending, chances of you getting the money back or ruining relationships because you didn't get your money back in a time of matter or didn't get it at all, that is a high risk. If you're borrowing, then you always have that on your head that, hey, I got to pay this person back. If you don't pay them in a timely manner, then again, you're ruining your relationship or whatever the situation is, whether it's between friends or family. 9 out of 10 times, it don't end well. Just going to tell you like it is. No sugarcoating for that. So if you are going to do it, I'm not saying don't do it. Do it at your own risk and just realize that you should lend out money that you plan on not getting back or have the lavish lifestyle or financial freedom to be okay with if it doesn't come back. Just gonna say that. So let's get started with the most common mistake in today's world. In today's living, the most common mistake that a lot of us do is living paycheck to paycheck. Okay. And the reason behind that a lot of time is our lifestyle. Is we're spending money on our lifestyle paychecks to paycheck because we're spending more money than we got coming in. So for that reason, we're putting ourselves at risk of being financially screwed. What's up, Tim? How you doing, bro? Welcome to the show. All right. So easiest thing on that, guys, is you guys need to be very frugal. You guys need to plan out your spending. You need to plan out your expenses. Um, I give advice to a couple people in the last month, and the biggest thing that a lot of people have a very hard time understanding is you cannot do a financial spreadsheet in your head. Okay, uh, the amount of people that can do that is very, very little. I want to say less than 1% that can accurately do financial spreadsheet accurately. Okay, like I'm talking about, you need to write down all your expenses. You need to write down all your income. Without actually writing it down, it is tedious work to do. But without writing it down and knowing what you're bringing in and what you're spending monthly and what you're left with behind, without a spreadsheet or without a software or app that actually tracks it down for you and breaks it down for you, you're not planning it right. You're not, executing the right way of saving money. So, um, write it down, man. Whether you use a spreadsheet or an app, write it down. Unless you are ready to write down and do the hard work to get yourself financially free and have a good saving and emergency fund and start investing into retirement and investments, you are really going to be screwed on your financial um, situation. The other thing we always want to talk about is making sure that you have a good credit score. Make sure you upkeep your credit score. And the biggest problem on that is people do not monitor their credit score. You should be checking your credit score twice a month minimum. I recommend every week, once a week, take out 30 minutes, pull all your credit card statements on your, because everybody's got those online, through your phone, through an app, or go online on the computer and just look at what your balance is, what your credit limit is, what your credit available is, and when your payment is due. The secret to that also is setting up alerts. You can, with most credit cards, you can set up alerts for certain amounts of funds that if you spend more than $50 or $100, you get an alert for it. You can set up alerts for when payments are due. So they can email you or text you that, hey, you have a payment due in 5 days, in 3 days, in 1 day, in 10 days, whatever. Most banks give you that option. You should set that up. You should also set up auto payment, minimum balance, or right above the minimum balance. That is a great way to cheat and make sure that you're on time and you never hit with a late fee. A lot of people pay late fees, NSF fees, balance transfer fees. All that fees mean is that you're giving the banks money for free. That's literally what you're doing. You're throwing away your good hard-earned money and you're letting the banks have it just because you're not able to manage it. Now, if you do have auto payment set up, you do need to make sure that you have enough funds in the bank account where it's going to come out of, that therefore you don't have any NSF fee or transfer overdraft fee or any of those fees that you may pay for it. So again, way to cheat is set up auto payments, set up alerts for purchases as well as when payments are due. Great way to make sure that your credit score stays good, make sure that your credit score is not being messed up. Another way of you looking at it weekly is also you don't have to pay for these gimmicks on credit card monitoring, like where companies are charging you $25, $50 to $100 to say, hey, we're going to monitor your credit and watch out that unnecessary charges don't happen, or credit fraud doesn't happen. Every single one of these credit cards protects you from unauthorized credit charge. So if somebody steals your credit card information and charge it and it was not you, you know that you can fight every single one of them and not pay for any single one of them. That's why we recommend that you don't use a debit card. You use a credit card, because if you use a credit card and somebody makes a authorization on or a charge on the card that wasn't authorized by you, 99% of the time you get your money. Well, first of all, it's the bank's money that you're using. You're gonna pay them, but if you didn't charge it, you don't even have to pay them because it wasn't a proper charge on it. Now, if it wasn't a debit card, which is assigned with your checking or savings account, and somebody withdraws money, whether it was authorized or not authorized, they're literally pulling that money from your bank, and now you have to fight to get that money back. Where if it's a credit card, the card that got charged, it was funds that wasn't even yours. That was the credit card company's funds that they say you have this much to use, and you have to pay them back when your payment is due. Well, if last month somebody charged on my credit card that wasn't me, when I get the statement, all I have to say is I'm disputing this charge. And guess what? If you're disputing a charge, that gets taken out of your statement, puts on a hold until the dispute is decided what's going on. You do not have to pay for that disputed charge as long as it's valid. Now, if it's not a valid, as long as it's a valid dispute. If you are doing this to fraud the credit card company, you are going to pay in interest and penalties. But let's say for real, like if you dropped a credit card or somebody stole your credit card information and then they charged it unauthorized, you do not have to pay for that with a credit card. That's the beauty of using a credit card, is that you do not have to pay for that because you are paying that money afterwards. You're using money that you don't have, and then you're paying for it when the statement is due. That's why credit cards are based on your credit, is your ability to be able to pay back. So if you have good credit, you're going to have more credit available, letting the credit card companies know that you are able to pay that stuff back. So use that stuff wisely. Use your credit card every single time. I don't use my debit card at all. I don't even use my debit card at the damn bank to make a deposit, man. Half the time I'm using my ID, and they're looking at my card, my number. I had my debit card expire for over a year. I didn't even realize that. So debit card is only there if I ever need to go to my own bank and withdraw money, or access my account. That's it. I access my account online. I review my account daily on my checking account. I review my credit cards once a week minimum, if not twice a week, just to make sure everything stays good. I have alerts, emails that consistently tells me if there's a charge on my card, and if it's authorized or not. It literally takes me a second. I dismiss it if it was me. If it wasn't me, I can go right away and dispute it. Therefore, I don't have to pay for it. Another way to also freeze that card, close that card. My dad lost one of my cards. I'm not worried about it because it's a credit card. I can easily replace that card, and I don't have to pay for any charges that are not mine. So, guys, utilize that. We were talking about borrowing money. So another problem a lot of people have is that they're living on borrowed money. Okay, again, lifestyle or whatever your thing is, whether you're borrowing from a friend or family or from the bank, if you're using credit cards and you're just charging the credit cards because you have a credit limit but you don't have the funds to pay it back, you are putting yourself in a hole, whether you know it or not. That's why I said you need to have a spreadsheet or an app that monitors your money, how much is coming in, how much your expenses monthly, and don't just estimate it or guesstimate it. Know exactly how much money that is needed for you to comfortably, go through the month without living paycheck to paycheck. You also then can find out where you need to cut, whether it's cutting, eating out, clothes, maybe downgrading on a phone, or a plan, or whatever the situation is. Maybe not having cable, maybe not paying for some apps. Um, Another thing that sneaks up these days is we start downloading apps and start paying for a whole bunch of apps that we don't realize they might be $1.99, $2.99, $4.99, $5.99, $10.99. That shit adds up. If you got 10 of the 10.99s, now you're talking about over $100. $2.99 times 10, you're talking about $30. That's going, that you don't know, that you think, oh, it's just a couple dollars. The Starbucks a day. If you do a Starbucks every day, can you afford a Starbucks every day? The better way is go invest money on a good uh, coffee machine or a cappuccino machine. Buy the damn packets and make it yourself. You know, those Keurig cups and whatever those things are, like, you can buy those real cheap. Get a very similar coffee to what you're gonna go pay $7 or $8 at Starbucks. Now you're probably spending 50 cents to $1 at home. So you know that's living beyond your means and living a lifestyle for the most part. You can also just go to the gas station and spend $2 or $2.50 for a cappuccino. Instead of going to Starbucks. I'm not picking on Starbucks. I mean, if you can easily afford it, go to Starbucks, man. Not a problem. But if you're in a financial situation and you need to save money, those are some of the ways to look at, where you can cut off at. Eating out, that's another thing. If you're going to Burger King every day, if you're going to McDonald's every day, if you're going to, steakhouse every day, and you're running into funds being an issue, well, it's cheaper for you to bring food home and make it yourself, and save money on that. It's also healthier, honestly speaking. But I can't talk about health, man. Look at me. I'm still fighting that fight. I got somebody else comment down there. I didn't pay attention. What's up, Jordan? Shady J in the house. So, those are some of the things that we can do to, cut back on our things and save our money and, be at a better financial situations. So the biggest other mistake we do is we don't have emergency funds or a savings account or saving funds saved up. If we do, what we do is we start dipping into that savings account and start paying for stuff that we really don't need, or we can wait on, or we can, substitute for something else. Um, I'm not gonna go too much in detail on that because that's just basically very simple: is save your money, leave the money untouched, unless you really, really need it. Emergency is not the hey, uh, my girl needs a better car, let me get her a better car. Emergency is like, hey, my car's transmission went out. I need to have that transmission because that's our transportation. Okay, you should have some funds saved up for automotive repairs. Honestly speaking, like a monthly base, maybe putting up a $50 in that account, and if you put $50 a month, 12 months a year, that's $600. That can go towards oil changes, tires, brakes, transmission, a whole bunch of stuff. Depending on how many cars you got and what your maintenance is. If you got a high-end BMW and your maintenance is $300-400 compared to a average car, a Chevy, where your oil change is like $39-49, you need to save accordingly to what you got. If you got 6 cars, you also need to save times 6, not that one. Your expense is going to get up there. Just like if you got too many cars, you're paying more money for insurance. Because whether you drive every single one of those cars or not, you got to have insurance. Well, for the most part. There's some people that live without it, but that's just can get you in trouble. But we'll leave it at that. So, never-ending payments is another one. Never-ending payments means that you've charged up, and now now you're just making the minimum payments or making it just above the minimum payments, and it's never ending, and you don't see any real end to it. And what that leads to a lot of people is that they'll ignore it, stop making payments, they'll start getting collection calls, and they'll ignore those collection calls. Instead of ignoring those calls, before it gets to that point, again, write down a financial plan. Write it down. This is my expenses. These are my payments. This is how much I'm making in. How can I pay that off? Well, there's a plan on that, how to pay that off. You pay the smallest debt first and you work your way up. Or you pay the highest interest debt first and you work your way up or down towards whichever is eating up your money the fastest. Instead of paying every single card, man, you make minimum payments on. If you got 5 cards that have a balance on, you typically want to do is take the lowest one, pay that off, work your way to the next one, pay that off, work your way up to the next one, pay that off, and so on and so on. In the meantime, while you're paying this off, you're making minimum payments on time or a little bit over the minimum payment, and then paying off as much as you can on that one. That is the best way. Most financial people will tell you to pay off your debt is that. I don't really like going to financial companies to help you pay off because half the time they're not doing that as a free service, they're doing that as a charge. And instead of paying them, you can do the work yourself a little bit. Simple mathematics, and you can pay off your debt if you stick to it, short to no time, depending on how much debt you got. If you really have to, there's different ways you can transfer debt, or you can, transfer fund, do a balance transfer. You can do equity loans as a last resort. I don't recommend equity loans, but bringing to the equity loans, a lot of people that have houses and that have equity, especially now with the house prices gone up, a lot of people love taking equity loans. And the new interest rates, those are sky highs, man. I mean, you are paying a decent amount on an interest rate, and you're pulling out of equity out of your house and not leaving anything in there, and you're using the equity like free money. It's not free money. Unless you're really going to do something with it that's going to be useful and that's actually going to benefit you, I would not use that at all. What's up, my brother? Trip Turner. What's going on, bro? So, you know, as a lot of our automotive guys and a lot of other people out there spending too much money on houses, car, or projects. That is something else where you gotta be really cautious on, see where your money is going. If you have the money for it, yes, go, be lavish, be, productive, be, you know, build a project, have an extra car, have a sports car, have a luxury car, but realize what your expenses are, what your income is, and that you can easily afford the car. The other biggest problem I see being in the automotive industry for now 25 years is a lot of people will get a luxury car and only look at the payments, not look at their insurance, not look at their maintenance, and then they can't afford to keep the luxury car maintained properly. Now they end up losing big money on that car because now that car has a whole bunch of lights that come on, doesn't work properly, and they end up having to sell it or the bank repos. And when they do, they are losing big time. Give you an example. I just did a 22 model car today. I did a window tinting on. The guy's car looked like it was 15 years old. It's a 22 model. It's a year and a half, 2 year old model. Not maintained. It's been hit a few times. The inside was really nasty. So those, there's a lot of things that can go in that. So just be careful when you guys are spending money, especially if you're spending money on lavish stuff like, hey, projects, sports car, luxury cars, or cars beyond your means. And I'm not trying to diss anybody. I'm just saying financially, you want to make sure whatever vehicle you have, you can easily afford the payments, the maintenance, and insurance, everything that comes with owning a vehicle. Okay, if you're leasing one, same thing. Everything that comes with that lease, and knowing that in 3 years that car is not yours. And if you go over the miles, here's another thing on leased vehicles is that a lot of time you have certain miles you have to stay within. You also have to bring the car back in a good condition. So if you got some dings and dongs that are really noticeable, you are gonna pay for that. So for at least most part, especially how the new car market is working out there, they're taking care of most of the basic maintenance. But you still have to have good tires on it when you return it, and it still has to be in a good function uh, vehicle when they return. But mileages, most vehicles, 3 years, 36,000 miles on a lease, and if you put 50,000 miles on it, now you're paying additional for the additional 14,000 miles that you put on there. So if you're gonna go lease a vehicle, be cautious knowing that most lease, the way they're intended for you is to take the most amount of hit on a vehicle because most vehicles lose the most amount of value in the first 3 years or the first 5 years. So if you want a Cadillac Escalade, instead of going spending $110,000 on a brand new Escalade, you wait 3 to 5 years, you can get an Escalade for under 50. I'm just saying. Well, guess what? $110,000 Escalade now in 5 years is a 50,000. Somebody took that $60,000 hit, right? If you're gonna go get a brand new one, that's gonna be you. Unless you're gonna plan on having that car for 10 years, then uh, I would go take that hit because I like having a brand new car that I know I don't have to worry about maintenance or other issues. Having a factory warranty. But if I'm switching a car every 3 years, if I can afford it, yes, go for do it. If you can't afford it, don't live beyond your means. Don't buy a boat. Hey man, buy a boat. I want to buy a boat. Boats are fun. Who doesn't like going to the lake, man? Who doesn't like going fishing? This hot summer time, man. Who doesn't like to be out on the beach? Come on, Trip. Don't crush our dreams, man. I'm not here to crush dreams. I'm just trying to make those dream realities, man. How do you get and make those dreams reality? That's the goal of this show is to, man, make you more financially able to go and pursue what you want. Have that luxury car, have that sports car, have that big old boat, maybe a yacht, whatever. Uh, have had one for 3 weeks and working on it for two. Hey man, so that's what we're talking about. When you get these lavish or luxury items, just know that it's not just the cost of those luxury items, it's also the maintenance of those luxury items that you have to get. I have a lot of customers that have BMWs or Mercedes, and BMWs for the most part want premium gas. You can't put regular gas in it because they're made to take that premium gas. And if you can't afford the premium gas because the gas prices are already up there, maybe you shouldn't be buying that BMW. Well, at least not right now, not until you get a better financial handle on your situation. I'm not saying this is for everybody, I'm just saying for the people that are struggling. So the point is to educate everybody and be real with yourself. Um, One other thing, again, I'm going to go back to is writing things down and knowing what your things are. If you want to open up a business and you're a worker and you plan on like, hey man, I want to do my own business. I want to know what the expenses and all that stuff is. I make this much, my girl makes about this much, and I think we can afford it. Without you writing it down and getting it down to the exact numbers or averaging out what your monthly expenses are, you're not gonna know, and it's not gonna be a reality for you real easy. The best way to do it would be to write it down, know what your numbers are, again, where you can make adjustments to make your dream come true, and then go and accomplish it. There's always times that you're gonna have struggle. Right now, we're in unknown financial situation with the market, being up and down. Most businesses are struggling for the most part. Some businesses are doing great, but for the most part, the economy is going downhill. We all know this. It's not coming as fast as what a lot of people predict it to be. But at the end of the day, um, you know, car manufacturers are having issues. Housing, interest rates keep on going up. Uh, I know in here, Atlanta, there's a lot of new housing that's been developed in the last couple of years. Um, what you're gonna have is when you have overdevelopment is then you're gonna have a whole bunch of units that's gonna stay empty, or a lot of people are switching over from a traditional house to a townhouse because it costs less and they have to maintain it less. Now you're gonna have larger properties that's gonna be sitting out there. So if you're an investor and you have money, I would wait and pick up on those properties and turn those around into a renter or something like that. But I'm just saying, you see a lot of these things happening in the news, in your neighborhoods, in your business surroundings, that shouldn't come as a shock to you. Is that economy is not doing as good as they make it sound like. And in everyday reality, we're not making as much sales as we did last year or the year before, even with COVID. That's another thing. COVID money. COVID money for most people is gone. So a lot of people bought a whole bunch of cars on COVID money, thinking that that COVID money was going to keep on coming, and they want to let go of the traditional jobs and they want to be influencer or a YouTuber or a TikToker or whatever you want to call it. And not everybody is as successful on these things. Um, so you just got to be real with yourself. Is that, hey, I need a traditional job. Every industry where you have physical labor is struggling right now because they don't have adequate amount of employees, or how do I put this? Efficient employees, guys that can actually do the work. You have a lot of dead bodies that's standing there doing nothing. The biggest thing right now, a lot of your employees, they want to stay on their phone because our phone is our life. So you're not being productive when you're on the phone unless your job consists of you doing something on the phone. But for most physical jobs, it's doing the physical work. The newer generations, they're not really meant for physical labor, man, honestly speaking. Coming from a business owner that has some physical jobs, new guys, 8 out of 10 can't make it. They come in, they get a job, and then in a week or two or in a couple of days, they realize, hey, man, I can't do this. So we've got in our neighborhood, they tore up the streets, they were going to repave them. Well, it's been 4 weeks. My HOA is like, hey, man, when are these streets going to get done? The supervisor for the county says, hey, man, we're short on employees. We started 2 weeks late. If we started 2 weeks late, guess what? We're going to finish this damn thing 4 weeks, or maybe 6 weeks later. It's because they don't have the manpower. They don't have the physical labor manpower. That is a real crisis for the U.S. right now. We don't have a lot of good physical labor people out there. That also gives the benefit to the people that are in the physical labor job. It gives them more advantage to have a better job, get more income. Or if you're a business owner and you have the manpower, you can grab more jobs. You can grab more projects. So you just got to know how to work it. Anyways, guys, let me make sure that we got over most of our spending issues and financial issues. If you have any questions at any time, feel free to give me a message or a call, and I'll be more than happy to help you out with anything I can. So, last thing, having an investment and a retirement plan, guys. You should have an investment. You should have a retirement plan. If you don't, get one. You should definitely have life insurance. I highly, 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 highly recommend everybody having a life insurance. And instead of just having a basic life insurance, maybe having something with the IUL or something that actually increases your value in your life insurance, because a lot of those funds that can be also used, you can borrow those funds from your own self and use them for, paying for kids' college tuition, paying for something that you need to get done. It's it's money that will build up. But at the end of the day, if God forbid something happens to you, your loved ones are taken care of. They have some funds to pay for your funeral. They have some funds to pay for the bills until they get on their feet or figure something out. And hopefully you have enough to pay off all your debt and your house and whatever, and you can leave your loved ones with, a roof over their head that they don't have to worry about other than the regular maintenance bills, which, they should be able to finance on their own. But these are some of the things that needs to be talked about. But anywho's, that's pretty much what I had for the show today. If you have again any questions on it, please feel free to let me know. Um, and just if you got bills and if you got debt, if you got credit cards, don't ignore them. Pay them off. Work out a deal with your creditor, and get that taken care of. Pay the smallest amount first. Work your way up. Don't ignore your bills, and don't let the cards pile up, and don't keep on charging your credit cards. Just because you have credit limit doesn't mean that you should use it all. Goal is to use less than uh, ultimately you want to use less than 10%, but if you really want to keep a good high credit score, you should use less than 5%. I like being under 3 to 4%. Anywho's, guys, have a great week. I will not be having a show next week since I'll be out at the WFR reunion. If you're in the tint industry or automotive industry and anything that's film related, there is a WFR reunion happening in Athens, Georgia next week from July 26th to 28th. If you're attending that, I will see you there. If you're not attending that, you should really consider it because it's a great networking opportunity for any businessman or installer. You get to talk to a whole bunch of vendors. You get to see a whole bunch of top competitors, tinters, and hopefully improve your skills. Uh, Other than that, have a great week, guys. I will see you in week after next, and we'll have a guest for that one, and we'll go from there. Adios.